Hey guys, how's it going today is officially the first trading day that Voyager can buy back stock, at least 5% of their common shares. So very good day today. I don't know how the stock price is going to reflect, but I'm hoping that it keeps going down, so then I can buy some more, and the company can buy more back their share price for a much cheaper price. At least that's what I'm hoping, but only time will tell what will happen. So according to Daniel from the financial channel, he says that fully diluted Voyager has about 170 million outstanding shares. I'm not sure how he came out to that, because I can't figure out how he got 170. But according to the CSE, they have currently 141.5 million shares outstanding, and they have reserved for issuance of 30 million shares, 30.6 million shares. What is reserve? Reserve shares are authorized shares that are set aside for assurance in the future. Shares are often reserved for insurance under stock option plan. These reserve shares are part of a number of authorized shares, but the corporation may not issue them. Expect under the stock option plan. So yes, they're basically stock options to issue to management, but the company may not issue these reserve shares. So I'm not too sure. I mean, they're buying back stock, so why would they? I mean, options are nice, but do they need to do that? I don't know. Well, I guess so. So they have 30 million. And then if we quickly look on SEDAR for their financials that was released on May 25th, I have it up here. According to this, they have, well, I don't know how much money they have for working capital, but according to this, it looks like they have like 120 million cash held for customer. This is not their cash. I think this is like money they owe, which it's kind of strange. Should be under liabilities and not under asset. So kind of weird. But then the company did say that they had about $197 million of working capital according to their financials. So if you actually add these numbers together, that's 140 plus 52. That's about almost $200 million of cash. Like 196. I could pull a calculator. 72 plus 77 plus 52. This is a rough estimate. $201 million of cash. So I don't really understand the whole concept behind, how they say they have 196 when it clearly shows that they don't. But hey, whatever. It is what it is. And then the total, according to this, they have a total issue and a basic and diluted average number of common shares outstanding is 140 million shares. They have they made a total revenue of 60 million. The expenses was 30 million, which led to the profit of 30 million. There's fair value for loan payables of 30 million, and then warrant liabilities of 98 million. So basically their warrants was issued at like $1, and because it was issued at $1, you have to take into account the stock price going up, which is that's the reason why they have $98 million of loss in warrant liabilities. And that's why it looked like it's a loss, but it really isn't a loss. And interest expense of 1.3. I think this one could be considered a loss. So, but if we scroll further down, on the financials, I believe they have it here. So according to this, it feels like they've already exercised a bunch of stuff, because on June 30th they had 104 million shares, but then private placement of net warrant liabilities of 56,000, common stock for service of 2 million, common stock settlement debt of 230,000, options exercise, so they have already exercised the options of 1.7 million, warrant exercise of 12 million, common warrant exercise giving them $31 million of cash, 6 million of special warrants exercise giving them $2.6 million of cash, and then issuance of common stock private placement of 60 million shares giving them $133 million of cash, total cash of 1206, and their current numbers of common shares they currently have is 144.348 million, and it's not 170 million fully diluted. So I'm not too sure where where Daniel got his 170. I wish the company actually issue exactly how many shares would be outstanding after dilution, but they already exercised the option. So options outstanding. Outstanding at March 31st, 2020 is 6.991 million. As of June 30th, they had 7 granted exercise. Outstanding as of March 31st, 2021 is 11.713 million. Stock options at 32 cents USD and 64 cents Canadian. And then they have, I think that if you scroll further down, it shows their warrants. Number of this is options though. Oh, warrants are down here. Balance of warrants is 10.11 million warrants. So I guess so. I mean, if you take the warrants of 11 million, and then if you take the numbers of options outstanding is 11 million, 12 million, that would be another 20 million, $22 million, 22 million on top of 142 million, 144 plus 22. That is about 166 million outstanding shares, fully diluted. But they are buying back 5% of their shares. And then I just want to quickly go down to the bottom, which shows the operational expenses and product development. And as you can see, there is share-based compensation of 5 million. If you take out that share-based compensation, the expenses gone down another 5 million, which would be 23 million. So they would be, in theory, they are actually profitable, and $35 million, not $30 million. And then and they on this too, they spent a lot. They spent almost $9 million on marketing. $9 million on marketing that quarter. So the company doesn't really need the cash for marketing because it's already included in the expenses. So moving forward, they can continue their marketing because they are going to be generating more and more money as the month's next quarter, and the quarter after that, supposedly, unless the customers just completely stop trading, then yeah, I guess then they would have to scale back on marketing. But still, the company is extremely profitable, and moving forward, I feel like digital asset interest expense of $7.54 million. That's kind of weird, but yeah. So, like, interest expense. Okay, that's a little weird. I don't really understand this digital interest expense, but regardless, if you take out the share-based compensation and the depreciation, monetization, which is barely anything, I mean, I guess the company is really profitable. So we'll see what next earnings report is going to be like, but I'm thinking that the expenses will probably increase by maybe 35 million. And the operational profit's going to be huge next quarter. It's probably going to be like 65%. So, yeah, the expenses are definitely going to go up. It's probably going to be roughly, $35 million for total general and administration expenses. But they are going to be extremely profitable next earnings report. But we'll see. I mean, we have to wait until probably late July when they're going to announce the earnings report. Maybe early August. Who knows? But that's where I think the next earnings report is going to be, and it's going to be a very good one. And we'll see what crypto is going to be like in July. I think, even if crypto's like bearish, I still think the company is going to do well because of all the trading and volatility that's going on in the market right now. So today is the first. Today, in the U.S. market is not open, but the Canadian market is open. I don't know what the stock price is going to do. I don't know what the Canadian market is going to push the stock price up or down, but long term, regardless of the stock price going down, I still believe that this is a fantastic buying opportunity, especially if they use the cash to buy back stock. The VGX token was very volatile over the weekend. It dipped it dipped all the way down to 206, bounced back, dip, bounce, dip, bounce. I'm thinking that they're making a pretty penny off of their customers trading the VGX token. Bitcoin is also been very volatile over the weekend. Dip, bounce, dip, and then bounce. So, and then the same with Ethereum, and same with Dogecoin, and Cardano is not as bad, but it's like very similar. Crash, bounce, dip, bounce. So, lots of volatility going on in the crypto market right now, and the fact that Voyager is like, oh, we are offering no $0 trading. Customers are probably not. You're like, oh, it doesn't cost me any money to buy and sell, so I'm gonna do it a lot. I'm gonna buy and sell a lot, but they are secretly making money off of the spread. So, anyways, that is it for my video. Thanks for watching, guys. I hope you enjoyed it. Subscribe for future updates, and have a great day. Bye.